So my portfolio has been absolutely on fire lately. I've got several material stocks, which are all partially controlled by the movements in gold and silver. Now, the market took a huge beating, but my portfolio is up literally 30% for the year. Don't believe me? Let me just show you my portfolio tracker right here. And this is available down below. You can see every single trade that I've made in 2026. And I am a professional investor competing in the US Investing Championship for 2026. My year-to-date returns as of January 21st, when I'm recording this video, is now 31%. So things are looking great in my portfolio. But I got to be asking myself the question on everyone's mind, which is the topic of this video we're going to watch together, my silver exit strategy in 2026 when I plan to sell. Now, let's go into the OVTLYR fund right now. This was a $50,000 account that we started with. It's now at $66,000, which is actually even more than I thought. 16 divided by 50 is 32% right there. So again, live trades are made every single day on YouTube. And these are the positions I hold right now. KGC, MP, NEM, OR, PPTA, a little bit of SGov, and a little bit of SPXL. So I got to learn what the silver exit strategy is when I plan to sell, because while I said I am a professional investor, maybe I could learn something from this. I have a back-tested, proven trading plan that I'm going to be following, and maybe they'll coincide. I don't know. Let's watch this together and find out.
My silver. But first, I just want to say congratulations. Congratulations to everyone that made a killing on silver. So ever since I made that video about 7 months ago, the price of silver has nearly tripled. And I swear to you, people have been messaging me saying that with the money that they made from silver, it was enough to pay off their credit card debts to get out of the...
Before we get too deep, I want to pull up what's called the market cycle. Now, if you've not been watching us for a while, first I want to say welcome. Super stoked that you're here. But I want to share with you what the market cycle is. This is real, right? This is not just a theory, but this happens time and time again to lots of stocks. This has happened to gold and silver in the past as well. What you see is the big, beautiful, well, let me start here in stage one. Stage one is the sideways consolidation phase down here. Stage two is the big, beautiful uptrend that everybody wants to be a part of. Everyone thinks they're a genius when they are in a bull market, all right? Stage three is a topping pattern. When the moving averages start crossing back over, that's when you know the market has topped and things are not looking so hot. Stage four is the big, nasty downtrend, where all the other YouTubers are saying, you got to buy the dip, you got to buy the dip, you got to buy the dip. The problem with buying the dip is you don't know how far down it's going to go. But if you bought the rip, you don't know how high it's going to go, right? Do you see the difference there, right? If you buy the dip, you don't know how far down it's going to keep dipping. If you buy the rip, you don't know how high it's going to keep ripping. So why would you ever buy the dip? Buy strength, because it's showing you where the market is going. I like to look at it this way, right? The market will tell you the direction it's moving with the OVTLYR trend template, the 10 EMA, the 20 EMA, and the 50 EMA. When those cross over, it is mathematically a bullish trend. I don't have to put any sort of YouTube disclaimer on this because it always is a bullish trend. It mathematically cannot happen unless that's the case. But it does not tell you magnitude or duration. So this one right here, one of the stocks that I'm in right now, as you can see in a bullish trend, it's ripping higher right now, which is fantastic. But I don't know the magnitude nor direction. I'm sorry, magnitude nor duration. I can see direction right here. So talking about the market cycle, let's go over to SLV, actually silver itself. Man, what a giant run right there, right? You had your crossovers. Geez, where did this crossover? Way back here in May last year. Has done nothing but scream higher. In fact, let's go to SLV. Give me just a second here inside of OVTLYR. You'll even see the buy signal that OVTLYR gave for SLV as well. And right here, that buy signal came on November 11th, just screaming higher. In fact, let's mark on the chart real quick where November 11th was. So I want to see how much it's gone up since that buy signal was alerted, just on silver, right? Not any of the other 9,000 stocks and ETFs that we cover, just on silver. It's gone up 87%. Now, what's really cool about this as well is that if you understand how to trade in a stage 2 uptrend, you can make vuku bucks, as my mom would say. You could make so much money. The problem here is that most people have no idea how to get out. They will be on the other side buying as much as they can as it tops and comes right back down. They'll be over here in the anxiety, denial, and panic phase, buying more, saying, oh, it has to go back up. It should go back up, right? I'll tell the market what it needs to do. The market's going to listen to me because I'm going to buy more and it's going to go back up. The thing is that we do not control the market. All we can do is ride the waves that's given to us. And silver is on a huge wave right there. But I would not be surprised to see a pullback. Again, 87% gain. This falls what I would like to call, I got this from Mark Minervini, one of the greatest traders of all time, one of my actual direct mentors. It's called the 50-80 rule. 50% of the time when you see a stock do something like this, it'll fall by 80%. 80% of the time when you see a stock do something like this, it'll fall by 50%. Oh, no, Chris, that's not real. There's no possible way. Let me show you a stock. You may have seen videos about SoFi and how it's the greatest investment of all time. Had huge moves up, huge moves up, huge moves up, right? This move from here to here was 200%, a 200% up move. And I was also screaming, do not buy SoFi right here. What happened? And receipts are on YouTube, by the way. Go look January 22nd, 23rd. You'll see Chris saying, do not buy right here. Receipts are on YouTube. After it crashed down 50%. So even a stock like SoFi can fall 50%. Oh, but Chris, it recovered. See, since I bought more, it went back up. No, dummy. Don't construe this, right? The market moved back up. It had nothing to do with you buying your stock over here. Now, if you were smart, you could have got in and you could have got out and you could have got right back in again on another stage 2 uptrend. And what do you see over here? Remember, the moving averages crossing over is the stage 3. We're in stage 3 on SoFi right here. Will it fall by 50 to 80%? I don't know. I don't make predictions. I think anybody who comes on YouTube trying to make predictions is asinine. It's futile. It's stupid. There is no point in saying SoFi's going to go to $35 a share. You got to buy it right now. And Nostradamus, I didn't realize that made YouTube videos over there. And the most important thing you could ever talk about is SoFi. Give me a break. Point is, the market will tell you which direction it's moving. You just have to listen. You just have to listen. Let's keep going here.
The whole. It was enough money, enough gains to pay off their student loans, to pay off their auto loan, to own their car just free and clear. Other people have been telling me that they made enough money from silver that they now feel much more comfortable in retirement. And to that, I say, congratulations, and I'm so happy for you.
Dude, not only that, I actually heard one of our outliers, he asked me not to share who it was. One of our outliers has actually doubled his account trading silver this year in 2026. And it's 21 days into the calendar year. And I'm like, holy moly, way to go, dude. So it can be done.
Now, first of all, I just want to say this. If you want to sell some or all of your silver now and lock in your profits, then I understand. I think that's absolutely fine.
I agree. If that's what you want to do, let's go back to silver, SLV. Go for it, right? But what I like to say is whenever you are trading, we don't know where the top is going to be, right? We know we've seen the moving averages. We can see where the stage 3 topping pattern starts. But think about it this way. The last time you walked in your favorite barbecue restaurant, right? The last time you walked in your favorite barbecue restaurant, were you concerned about the bun at the bottom or the bun at the top of that? No, of course not. You went there for that juicy brisket just covered in sauce. That's what you came for, was the meat in the middle, right? If you try to sell out at the top, you don't know how much higher this can go. If you try it and buy at the bottom, that's an impossibility. It's not going to happen. You're not going to catch the very top. You're not going to catch the very bottom. No matter what any YouTube guru tries to claim that they catch the top and they catch the bottom, it's not going to happen. But if you understand that when a market looks like this, let it run as far as it possibly can. Don't get in its way. Then it will tell you, because it'll come back out of the bun and into the meat of the sandwich. And you can say, you know what? I'm a smart investor. I can tell when this is not working and I'm going to get out of the way before it crashes back down, if it crashes back down. So you can make incredible gains. But what I want to tell you guys is one of the fundamental aspects of trading is to cut your losers short and let your winners run out of control. Don't tell your winners when they need to stop. If silver's going to run, trust me, there were plenty of people who sold the entire way up thinking there's no way it can go up from here. There's no way SLV can go up over $50. There's no way SLV can go over $60. There's no way it can go over $70. Now it's at 85, right? Don't put your biases in the market. Just let the market tell you what it's doing. It's not that hard. It's not rocket science.
And everyone's circumstances and objectives are different. And there's nothing wrong with locking in profits. Like, don't let anyone tell you otherwise. But
there is something wrong with locking in profits if you don't have a reason to do so. Just because you're scared, that's not a trading plan. Hope is not a strategy. Fear is not a strategy. Having a documented, written set of rules to know where to get in and where to get out, that is how a professional acts. That is how a professional investor like myself actually acts in the market.
But in today's video, I'm going to tell you what I'm going to do. Let me give you a quick recap of what happens, which ties in with where we're going. So I made this video 7 months ago. I stated my case with research why I'm buying silver. This is a 5-year chart of the price of silver. And when I released that video, the price of silver was at $33 a troy ounce. And today...
Oh, he says that's roughly May 2025. When did this bullish trend start? May of 2025. How interesting. Maybe this guy's an outlier too. That's when the trend started, right there.
At the time of making this video, the price of silver is currently around $90 a troy ounce. And I read some comments, people saying, Brian, you didn't give us enough time as a warning to buy silver. I was saving up money to make a purchase. But
first off, this guy's going to do what this guy's going to do. Not give you enough time. Am I your daddy? Do you want me to hold your hand and say, oh, okay, Art, it's time for you to go buy your silver. Okay, Big Red, it's time for you to go purchase your silver shares. Mr. Finn, right here. I'm giving you plenty of warning. You're not a big boy. You're not a big girl. You're not a professional. I'm going to tell you exactly when to do this. No, shut up. Anybody who's complaining about that doesn't need to be trading in the markets, right? Just buy an index and go away.
Actually, that is not true. The reason why I say that is because in 2024, I made this video called The Great Meltup. And I said that the stock market is going to go to record highs because of what the Federal Reserve and the government are doing.
And apparently this guy can see the future. I'm just saying.
It's a 10-minute video, and at 9 minutes and 42 seconds in the video, I explicitly said that you should buy silver. I didn't say, oh, maybe you should think about buying silver. No, I said you should buy silver. And I even said the same thing in 2023. Anyone can confirm that. Now, here's my exit strategy.
But by the way, I've played this game before. I've been on TV hundreds of times. I had a publicist in the past, and I remember the publicist telling me the very first time I was on TV, I was so nervous. I was shaking. My palms were sweating. It was exactly like Eminem in 8 Mile, right? He's saying, I'm nervous. I barfed up mom's spaghetti, right? I don't know what I'm doing. And my publicist was like, just give your opinion. If your opinion's wrong, no one's going to remember. But if your opinion's right, you can always go back to that. Weird how that works. I bet he wouldn't be making this video if he had made his prediction and he wasn't right. I'm just saying.
In order to know when to sell your silver, you need to price your silver in gold. It's called the gold to silver ratio, the GSR. So you're simply comparing how cheap or expensive silver is compared to gold. So for example, if the price of 1 ounce of gold is $3,300 and the price of 1 ounce of silver is $33, then you take the price of gold as the numerator, and then you take the price of silver as the denominator, and then you just divide it. It's very easy. In this example, the GSR is 100. Essentially, the GSR is telling you, is silver cheap or expensive compared to gold? Okay, so why am I comparing the price of silver to the price of gold rather than comparing the price of silver to US dollars?
And this is interesting, right? This is what he claims is his exit strategy. Before we could get too deep into it, I want to share with you my exit strategy. So again, I have 1, 2, 3, 4, 5 positions in the material sector, which has a lot to do with gold and silver. And of course, this is in the $50,000 outlier fund that we are showing exactly how to trade in the US Investing Championship. So my exit strategy looks like this. So those are all Plan M exit signals. So first, having an outlier sell signal. So I have all of these marked as favorites of mine inside of Outlier. So we'll pull this up real quick. I'll drop off the screen so you can see all of them. And all I have to do is sit over here and wait. All I have to do is sit over here and wait for that sell signal. In fact, today we got a sell signal on the Dow and a sell signal on Qs, but we still have a buy signal on the market and all the stocks that I'm in. But unfortunately, SoFi, the greatest stock of all time, is still sitting on that sell signal. A 10-20 bearish cross. So I'm actually waiting for the market to tell me, rather than me telling the market when it needs to go down, I'm waiting on the market to tell me. Now, we talked about the 10-20-50 earlier. We're talking about these two lines, the blue and the black line, crossing back down. At that point, that is when the market gives you confirmation that things are not working, right? Rather than you putting any sort of bias onto it, let the market tell you. Next, if it runs into an outlier block, none of these are going to run into outlier blocks because these are at 52-week highs or even potentially all-time highs. Outlier blocks are areas of support and resistance on the chart. And what they are is basically representing people who have been stuck in a trade waiting to get out at break even. And we have seen time and time and time again, once it comes into this area, a huge drop back down after that point. Next, if there's any earnings, I don't have any of those coming up soon. Any gap and craps? It looks like we are going to have some gaps this morning, but none of them greater than 5%. Most of these are between 2 and 3% gap ups this morning, so looking great. And then these are my stop out points written on the chart like that. So that is my exit strategy. Now, this exit strategy was not something that I pulled out of my backside. No. We tested this. We have a team of over 20 PhDs, actuaries, I like to say rocket scientists and math nerds that came up with a solid trading plan to take the raw buy and sell signals that come out of OVTLYR and actually create a trading plan around that. Now, where do you get this trading plan? Down below, the exact PowerPoint that I'm showing you is linked down below. Down below, this spreadsheet for every single trade that I put on is linked down below. And if you go over to whatever channel you're watching this on, go over to the playlists and you will see OVTLYR University Alpha and OVTLYR University Bravo. It is 100% free. I'm teaching you everything that I've learned over 17 years of trading. Okay? No guessing, no trust me, bros. Everything is data-based, and we have the numbers to back it up too. Let's keep going.
It's because why would I measure the price of silver against the US dollar, which is a fiat currency that is backed by nothing? You might as well compare it against monopoly money. So
I'm going to address this real quick. There's zero chance that's happening. 100% zero chance that this is happening. I don't know what you're looking at, but you're not looking at the daily chart. Change it to the daily chart, and you're going to see big, beautiful uptrends like this.
Listen, I'm not ranting here. I'm just telling you this so that you can understand my logic. You see, if you want to analyze historical data, whether silver is cheap or expensive, then I have no choice but to compare silver to gold, not silver to US dollars. Because if you ask me, is silver cheap or expensive, historically speaking, adjusted for inflation, then the answer is nobody knows exactly, because what are you using as the rate of inflation in your historical analysis? We don't know. Nobody knows the real historical rate of inflation over the past 30 years, the past 50 years, etc. The rate of inflation from the CPI reports provided by the government is a complete lie. It's referred to as the CP lie. So basically what I'm saying is that I want precise factual data for historical analysis to see whether silver is cheap or expensive. Here's the gold to silver ratio, the GSR, over the past 30 years. When the GSR is in the 60 to 80 range, historically speaking, that is normal. It doesn't look cheap or expensive relative to gold. And if you noticed, it fluctuates. It goes up, it goes down, up and down. And the theme is very simple. Buy low, sell high, make a lot of money, and enjoy your life.
Okay. Sure. Buy low, sell high, make a lot of money, and enjoy your life, right? But don't forget that low is super relative, and it could go lower and lower and lower and lower and lower and lower, and then you're not enjoying your life so much. Things are bad, and then I might have to wait years for it to come back up, and then this has not been an enjoyable life. How about, rather than that bullshit, how about we actually buy on the way up, buy strength, buy when people are getting more greedy, rather than as people are getting more fearful. But Chris, I heard Warren Buffett say that you gotta buy stocks when people are fearful, right? And then you sell them when they're greedy, right? Yeah. Also, I heard Warren Buffett say this. I don't know where or who said this, right? Freak the F out and panic sell. Everything is over right now. It is effing over, according to Warren Buffett, right? That you could make all kinds of quotes for whatever reason you want. Point is you want to find the greediest stocks in the greediest sector while they're getting more greedy and the market is getting more greedy, right? Because human psychology, human fear and greed, and human emotions drive prices up. It's just a fact, right? The markets are not efficient. Period, full stop, add a period at the end of that sentence because there is no disclaimer there, right? The efficient market theory says that people act rationally because everybody has the same information all at the same time. And so therefore, everybody will know exactly what to do in a very smart way. When's the last time you ever saw a stock trending up or down? Silver right now, exactly. Do you think they're all acting rationally? Do you think the efficient market theory would have said that this is going to happen? Of course not. No. People are getting greedy AF in silver right now. They're getting greedy AF in gold, and they're letting the stock run, the ETF in this case, run like crazy. And let them join in on that move right there. Go crazy with it. But once it stops getting more greedy, what are all these people left to do? Turn fearful. But the problem is that you want to put your biases on it and say, well, of course they're going to stop getting greedy when I tell them to, so it has to go down. No, you don't know that. There's no possible way to know that. But remember, Nostradamus over here told us exactly that the market was going to go crazy and that metals are going to go crazy. And, of course, he definitely would not have been incorrect. And had he been incorrect, he certainly wouldn't have shown that again for us. But let's keep going.
When I made that video last year about buying silver, I saw this. The GSR was above 100. And that's why I said that this is an asymmetric bet. The risk to reward was just so lopsided in our favor. In my video from last year, I said that once the GSR gets to 50, right?
Rick, one of our OVTLYR University students, man, I should have been teaching this in class, right? Damn, if I had only known to buy low and sell high before today. And the funny thing about that, Rick, is I think that 90% of people blow up 90% of their accounts the first 90 days of trading, trying to follow that exactly. Because they think they know more than the market. They know where low is. Duh. They know where low is. That way they can get a great price on the way back up, right? Think about it this way. There are consumables and there are assets. Assets you want to buy as they're going up, right? If you are going to buy real estate, do you actually want to buy it when Texas Roadhouse just closed down and everybody's leaving and the price of that house, let's say it was 500,000, then it's gone down to 350,000, but nobody's buying it because it's right beside a crack house on the corner. And they're like, well, how about we lower it down to 100? Surely somebody will buy it at 100,000, right? Where on that spectrum between 500 and 100 did you say, that's low, baby, let's do this thing? As it's gone down 80%, right? And because things are going bad, who knows how much further it can go down, right? Target's closed, Texas Roadhouse has moved out, they shut down Church's Chicken. Nothing looks good in this city. Would you want to buy it then? Probably not. That is an asset. Stocks, options, ETFs are all assets as well. You want to be buying it when they're building the Lowe's, they're building the Starbucks, they're building the Texas Roadhouse, they just put in a brand new Chili's, and the neighborhood is also growing. New families are moving in, they're building new schools, the property values are going up. Translate that to stocks. It is a perfect correlation. You can't tell me elsewise because it is the truth. Buy stocks as they're crashing up, not as they're crashing down. Market tells you which direction it's going, just like it does in your neighborhood when you're looking to buy a house.
Represented by that green line. I'm going to start selling. On January 14th, the GSR fell slightly below 50, and I sold 25% of my silver on the stock markets, my SLV. And I just want you to know that on my Patreon sites, I notified the community immediately.
We're going to skip this forward, by the way.
Selling because my thesis has partially played out and because relative values matter. It means silver has already outperformed, volatility is increasing, and risk is no longer asymmetrically in our favor. Historically, when the gold to silver ratio compresses quickly, silver often overshoots and then underperforms gold in the following phase. That doesn't mean that silver crashes. It means that gold tends to become the better vehicle. The second thing that you have to know is that gold and silver move together. So generally speaking, gold and silver are going to move in the same direction. Right now, as I told you, the gold to silver ratio, the GSR is at 50, right? But if the price of gold doubles and the price of silver doubles as well, then the GSR is still going to remain at 50. So maybe silver does hit 100 or 150 or 300. But if the GSR doesn't go down, I may not sell my remaining silver that I have. Again, I'm not going to sell based on a dollar price. I'm going to sell using the GSR as my primary indicator, which is why I cannot tell you to.
And in that case, as long as he has a plan, and as long as you have a plan, just like I have a plan, and we can all have very different plans. And I'm not saying that my plan is better than his or yours, right? You could probably be making way more money than I am, and that's okay. The point that I'm trying to get across here is that you need to have a plan. And once you have that plan, enact that plan. Don't climb the wall of worry and watch it go down the slope of hope on the where is the market cycle? On the market cycle, because you know what lives on the wall of worry and the slope of hope? One of the things we like to call around here the monkey hammer. And you don't want your account to get monkey hammered when you're on the other side of this wall of worry and the slope of hope.
To sell at X amount of dollars. And that's exactly what I said in my original video. And I just want to tell you this, that buy and hold, like that strategy, it sounds so simple, it sounds so easy, but it's not as easy as it sounds, not to execute it, because people get uncomfortable when they're up a lot of money with unrealized gains. And I know a lot of people holding silver got nervous when silver hit 50 a troy.
You know what's really cool? I'm not going to name names, but when you're an outlier, one of the strategies we teach is rolling options. And you absolutely, completely eliminate this in your life. Now, I know several people who, when gold had its huge run last year and silver's having its huge run this year, took long call positions, deep in the money long call positions. And then as it went up, they rolled from one strike to the next, rolled to the next, rolled to the next, rolled to the next, and have rolled 6, 8, 10, 12 times. By doing so, you take money off the table, so those unrealized gains turn it into actual real dollars in your portfolio. How about Art Senior Wahoo, one of our Outlier University students, has rolled silver 11 times. Do you think he is terrified looking at this chart right here? No. Bro is so ecstatic because he got to take partial profits all the way up. He has, I would assume, absolutely zero risk in the trade. And by zero risk, I mean he has already taken enough profits out to more than compensate for the risk that he took and probably has guaranteed huge amounts of profits all the way up. It is an amazing ninja hack that we teach here in Outlier about how to take partial profits, keep the trade alive. You're basically just, all you're doing is rolling from strike one to strike two, and it allows you to keep the trade on with the same amount of deltas and run like crazy. Run like crazy. Yeah, he is completely risk-free in the trade. All those gains. So there is no anxiety whatsoever. This is so sick, right? Dunk is on roll 15. Yeah, by roll 2 or 3, you're getting close to completely having zero risk in the trade.
Around 60, 80, and so on. But I didn't, because I set my target based on the GSR. The third thing is that you must stay invested. That's just my opinion, especially in this type of environment.
Take that in two different ways. Must stay invested is that makes me nervous. But when you say let your winners run out of control, now we're talking.
Environments. Okay, so I sold 25% of my silver, right? But what I'm doing is a rotation. It's not a liquidation. I am staying invested. I'm simply selling my silver and reallocating that money. I'm not going to sell my silver and stay in cash and hope and wait around for a crash that may never come. I'm telling you.
That I agree with. A lot of people get really scared and they're like, oh, something has to crash, right? How many YouTube videos have you seen? It's over, right? The crash, the exact date of the market crash. Shut up. All you got to do is stay in the trade as long as it works. Let it run out of control. When it's not working, go into the cash vehicle that you choose. I like SGov because I get paid to sit in cash. When a new trade develops, you get into that, but you don't put your personal biases into the market.
I'm telling you, we are in the middle of the great melt-up. The government is telling us that the purchasing power of our dollars is being devalued at a rate of 2.7% a year. I call BS. Like, it's not 2.7%. Like, who are you kidding? If I stick my cash into an interest-bearing account and I earn 3.5%, then I will be losing money to inflation, and I do not want to lose money. Okay, so can the markets crash? Sure, it's possible, but then again, they may just keep going up. The Federal Reserve is printing money, they're lowering interest rates, and why should I fight the Fed? All I know is that if I'm a long-term investor and I stay invested, then market prices are just going to keep going up thanks to financial asset inflation.
Right, and again, stay invested as long-term as you want, by all means. As long as you have a reason to be. As long as you have a reason to be. By the way, the market just opened. Wonder how our trades are doing today. Oh, let's go look at our account view. Oh no, we're up to $69,000 in the Outlier fund here. So 69, that's 19 divided by 50. Oh, now we're closing in on 40% gains on the year. Huh. And every single trade, link down below, every single trade is live on YouTube. What are you waiting for? The Watchers says, Chris, your 10, 20, 50 is spot on. Yeah, because it's math. It's an unavoidable reality that when the 10 is over the 20 and price is over the 50, that is a bullish trend. It just doesn't tell you the magnitude or duration, but it is just math. And that's why it always works, dude. I have a screener on toss 2% from the 50 EMA, alerts when the 10 or 20 across, and add to a watch list to monitor, consider looking into this for early momentum in your technicals. Outstanding work. Outstanding work, because it's just math. All right, let's keep going here. We're nearly done.
The fourth thing is dollar cost averaging. When I buy a stock or a position, I like to dollar cost average in. I typically like to do so in about 2 to 4 increments. So generally,
there's nothing wrong with dollar cost averaging on the way up. Totally agree with that. But if you're dollar cost averaging on the way down, again, you don't know how far down it's going to go. Let's go back to the neighborhood situation here, right? You're looking at this horrible neighborhood, and you're like, well, I had $500,000 budget, so the prices have gone down 80%, so I could buy 5 houses here. Well, now you got 5 shitty houses, right? Or you use the 10, 20, 50 on the neighborhood prices, and then it's going back up, and you're like, okay, I know I'm gonna have to pay a little bit extra, but that's fine. So I'm gonna buy one here. I know I gotta pay a little bit extra, and I gotta buy one here. I know I gotta buy a little bit extra, so I gotta buy one here. So instead of getting 5 terrible houses, maybe you only got 3 houses in an up and coming neighborhood. Which one of those investments do you think is going to pay off more and faster? The one that's obviously going up in value. There you go. There you go. Let's keep going.
in about 3 batches. So for example, if silver is at $33 an ounce, then okay, I'm like, okay, I like it, I'm gonna buy some. If silver drops to 30 an ounce, then I'll buy some more. If it drops to $27 an ounce, then I'll buy some more. That'll be my—
This is stupid. Don't do this. We're gonna end the video right here. Whatever he's talking about right here, you don't know the future. So what if it goes from 33 to 30 to 27? You're already down 20%. You're already down 20% from your original purchase price. You're like, this hurts, but I'm gonna buy more. This dip buying shit better work, because this is not looking very good. I wonder. Well, one of the greatest investors of all time probably has something to say about this. Oh, wait, he does. It's losers average losers. So don't be a loser. Don't be a loser. Don't average down. Sorry. Truth hurts. Oh, no, we're over 70,000 now. Wow, this is going amazing. Listen, all of my trades are linked down below. The entire spreadsheet is linked down below. The full PowerPoint of how I'm trading is linked down below. What are you waiting for? Go get that, start using these trades, and maybe, just maybe, you can find the financial success that you're looking for. And if you're ready to save time, make money, and start winning with less risk, click one of these 2 videos, and we'll talk soon.